You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike TOSAW from St. Charles Wealth Management, along with Mark the Greasy Meatball Sebastian and Andrew the Rock Lobster Giovinazzi from OptionPit.com. And now, get ready to hit the Option Block.
All right, everybody. That music means, yeah, it's Thursday. It's noon Central. It's 1 p.m. Eastern. It is time for the second of the bi-weekly editions of the Option Block. My name is Mark Longo from the OptionsInsider.com, as well as, of course, from this fine network. Glad you guys are liking the network. If you do indeed like what you're hearing, I do see you guys diving in en masse these days. Make sure wherever you're listening to this program or the full network, leave a review. You can leave a review on this program. You can leave a review on the network, whatever floats your boat. Just keep those reviews coming on your platform of choice. Helps new people continue to discover the network, which, as we've said before, more important than ever these days out there. And, of course, if you have a question or comment, we'd love to hear from those, too. Hit us up. You know how to find us on most of the major platforms. Don't leave the questions in the review parts of the platforms. We don't really check those as frequently as you might want if you're going to put a timely question in there. We do love to hear from you guys, so keep those comments and questions coming. And see who else we're going to hear from today. Let's go out first off to the quiet, the tranquil, some might say the sleepy Hamlet. It may be sleepy on the outside. Inside, he's trading up a storm. He is Uncle Mike TOSAW from St. Charles Wealth Management. Uncle Mike, welcome back to the program. How goes the storm of trading, sir?
All is well, all is well. I can talk a little bit more about that in the trading block, but I was thinking, as much as I love my hometown, every now and then, maybe just say I'm from parts unknown. It just sounds kind of cool.
You just want to be like the Ultimate Warrior. You want to be like the Ultimate Warrior in Demolition. That's what you want to be.
Maybe.
Is it a coincidence that all of the coolest wrestlers from the 80s were from parts unknown? I don't think so. So I'm just putting it out there, so you can mull that over. All you wrestling aficionados out there. Parts unknown equals cool. Back. I'm not sure if there are any wrestlers in the modern era who are from parts unknown. I'll have to check with my little guy. He's much more up on the roster of these days than I am. But an interesting thought question, nonetheless. And also joining us, I'm not sure if he knows even who Axe and Smash were. He is the Rock Lobster, Mr. Andrew Giovinazzi from OptionPit.com by way of Carmen Line Capital. Mr. G, welcome back to the program. Are you well-versed in the oeuvre that is demolition, sir?
I have to say no, because that would mean I watch TV or something, and I never do that.
You are a Philistine. You didn't even watch it in the 80s, sir?
No, I was in college. I'm not watching wrestling in college. There were other things to watch in college.
You were in some weird hippie commune where there was no TV out there. All right, fine. Let's just keep rolling right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the trading block.
All right, everybody, welcome to the Trading Block, the portion of the show where we talk about what the heck is trading out there. And if you've been waiting for a bit of a break to the bull, well, you got your day today. The rest of the week, not so much. The rest of the week was pretty much rally ho, rally ho, rally ho. In fact, yesterday we saw some, I think the technical term is just ridiculous numbers. S&P up nearly 1%, NASDAQ up laggard, rare day of the laggard, up about 0.6%. The Dow up almost 1%, and our Russell 2000, we'll get into this more on TWTR in a little bit, listeners, up 3.5% yesterday. So we've been talking for a while how small caps are leading the dance to the upside and to the downside. That continues to be the case out there. Coming into today's show, a little bit of a different narrative out there. The worm turning a little bit. I wouldn't really get too excited if you're on the bearish tip out there because we've seen these come and go before, but most of the major indices are in the red today. S&P and Dow both off a little more than 0.5%. NASDAQ at exactly 1% to the dark side. And our old friend IWM, yeah, it's leading the charge again, off about 1.2%. So small caps, once again, leading the dance out there. Our old friend VIX had a little bit of a lift come into showtime, but now it's kind of giving that up. It was at about a 28 when we started the show, which put it down almost. It was almost unched from our last show, down about a quarter of a handle. Now it's near about 27.5, which puts it down about 0.75 of a point out there. So it seemed like vol might be getting a little firmer than just all coming in. VVIX also actually up a little bit. I take that back. VVIX was about a 115. It was 114 on our last show. So a little bit frothier out there, but still floating around that close to 120 level, which we've used in the past as a bit of a benchmark for, hey, things are afoot out here. You might want to pay attention. And our old friend VXX coming into showtime was at a 32.25, which was exactly, literally unched from our last show. We were at 32.25 on our last episode as well. So a whole lot of nothing net on the vol side, at least. Now, as of the show, a few minutes in, we're seeing VXX a little bit shy of the 32 handle now, so off about a quarter, but still a whole lot of nothing for a week that was surprisingly upside-centric for the Lions' share of it. And if you're looking for nuggets out there, an interesting one came across our radar. This was a few sessions ago. I think this might have been Tuesday. I lose track of the endless rally days, which one is which. But one of these days this week when we were rallying to the upside, then, of course, we gave up the ghost. That day kind of stands out for a lot of people. Rallied hard. NASDAQ was up over 2%. And then closed down over 1% on the same day. That's a rare occurrence. In fact, very rare. The folks, I believe this was over at StockTwits, pointed this out. This is only the second time in history that has ever happened. And if you're wondering where the first time was, if you're a bull, maybe this is a little bit ominous for you. The only other time that's ever happened was on March 7th of 2000. Yes, that was the exact literal top of the dot-com bubble. So a lot of folks were saying, ooh, whistling past the graveyard, here it is. This is the sign that the market is done. Of course, we rallied for the next few sessions anyway, so maybe putting a pin in that one. But still, interesting nuggets out there for those of you who are looking for perhaps some ominous sentiment indicators out there. That's certainly one. Another one I know that the meatball has been beating the drum on quite a bit. Others have been diving into this as well, is just the increasing domination of tech mega caps, as they call them, out there in the S&P 500. That share, we mentioned for a while, that share has been growing to an alarming rate. I think this chart came here from July 10th. It's closing in on 28%. Now it's about 27, 26 and change, looks like here. It's hard to read a little bit of the legend of this graph. But either way, it is the highest percent of market cap share ever in the S&P 500 for these tech mega caps. Obviously, those techs are a more recent addition to the index. We talked about 2000, the only tech name in there really. Well, there was Intel and also, I believe, Microsoft. But still, different beast entirely over the decades as the S&P has evolved. But these days, it's all tech, and tech over a quarter of the market cap share out there right now. So a lot to parse, a lot to analyze. Are you concerned by that? Are you concerned by the other dot-com bubble indicator? Are you rally ho, all ships ahead? Uncle Mike was talking on Monday about maybe starting to dip his toes in. So let's start there. Mr. Uncle Mike, sir, how has gone your week since last we chatted, sir? What have you been up to? What have you been trading up in the storm of trading that is St. Charles Wealth Management these days?
Well, on the show on Monday morning, I did dip my toe in the water a little bit, and I quickly got out of the water later in the day on Monday. I mean, by my rules, I have to be very conservative with what I do when the market's negative on the year, and so that's kind of the rules with which I'm following, and that I have to have only small positions. And I was hoping to put on a bigger position at the end of the day, but the market was positive early in the day, and then it went negative. So I'm like, well, I can't do that. So still just kind of puttering around with a really, really, really small position. And that's where I'm at right now with a lot of my trading. A lot of client money within my simulated index concept is in government treasuries, selling various covered call strategies on those. And we won't outperform the market year in, year out with that. But if the market does tank, we're in pretty good shape with that. So I'm pretty happy with that, but just kind of, this is the type of market that I hate, in that my rule dictates that when we're positive, hey, have at it, let's go to work. When we're negative, my hands are tied. And so we keep going positive, negative, positive, negative. And so it's frustrating from that standpoint. But my whole goal when we're at right around where the market opened on the year, right at the 322 level approximately with SPY, I just got to be very careful with it because I don't want to get chopped. And so when we're in this type of territory, I got two rules in trading. Rule number one, don't get chopped. Rule number two, don't forget rule number one. So that's kind of where I'm at right now in terms of some things that are lighting up my tape at this point in time. Apple did not want to go above 400 the other day. I think that's pretty significant for Apple, and that a lot of times when Apple does go over a large number like that, or it usually goes up a lot further, a lot quickly, and it did not. It could not break the 400 mark, and I think that's something that's pretty significant on that. I have some thoughts on silver, but I'm going to save that for TWTR in the next show we have coming up here. And then the other thing that I think just really, I know I'm just kind of saying something that everyone feels at this point, is that what's going on with COVID? I know we had some news earlier, not today, but about a potential progress on a vaccine. But the reality of it is that we're not going to, even if we have a vaccine, it's still a long ways away till it can really have the effect it needs to help the disease. And so with that, in the meantime, even if we open the entire economy tomorrow and everyone goes out and just goes about life in general, but maybe some social distancing, wearing masks, doing that type of thing, it still will increase the spread of it, and it still will increase the death rate. And so just the consistent debate is the cure worse than the problem? So in other words, are we hurting ourselves more by keeping everything locked down because of the fact that we're going to lose businesses, lose jobs, things like that? But ultimately, we need to have confidence when we go out. And so that's another thing that's going on with this. Now, since if you're listening to this show, you're likely of the frame of mind that I'm going to figure out how to make money no matter what. And I applaud you for that. I think that's a wonderful thing. And that's the benefit of the option product, the greatest financial instrument ever invented, in my opinion. But just have an understanding that just buying out of the money calls like I did the last few years and just sitting on them and taking profits and doing that market's probably not going to be here for a while. So you're going to have to be nimble in these types of markets and play it that way. Now, the other thing that the market just talked about was the fact that all of the tech stocks that are taking over a larger portion of the S&P 500, and that Amazon, it's not going to really hurt it with COVID. If anything, it's going to help it. And Amazon was a really good company before COVID to begin with. So things like that are going to continue to be a benefit. So at this point in time, the market has had a hard time going positive on multiple occasions. And so I'm being very cautious on it. And I know that ever since March, I feel like such a different person every time I come on this show. Be careful out there, folks, because market is still negative on the year.
These are interesting times. Yeah, even the Perma Bull, Uncle Mike, maybe a little bit dubious out there. It is funny whenever you talk, and not funny, obviously the news is dire, but it is funny to see the impact of this, continued virus news on the market, because they are so selective in what they allow to digest. Positive news, the notion of a virus. I made the joke earlier this week. There was one bit of news that one of the trials may have looked all right, but they need further data, and then a whole bunch of dire news about the rest of the economy shutting down here, and states going back to shutting down, and death rates skyrocketing, and states having record numbers of cases, and yet the market chose to myopically focus on that one thing and rally, for most of the week. So I kind of have let the virus news kind of bounce off my back now, because I know the market isn't going to digest it in a rational way. I've seen a lot of irrational markets, going back to the .com days. I can recall, you walk around, even professional traders on the floor of the SEBO back then, they were picking up underlyings left, right, and center, and you'd say, what does that name do? And they're like, I don't know, who cares? It's web. That was the answer. It's online. That's all that mattered. And there's a lot of that going on right now. It's not quite the same argument, but there's a lot of that. I've said it before, kind of whistling past the graveyard, just loading up on this stuff, and apparently thinking, you're right, if we had a vaccine tomorrow, how much would materially change in our lives right now and for the next few months or 6 months? Probably not a heck of a lot. People are going to be flying again en masse. They're going to be taking cruise ships. They're going to be going to restaurants. A lot of the restaurants that have already closed, are they really going to open up again? Probably not. So the notion that this one vaccine trial that's progressing, which is good news, that's optimistic, that's definitely cause for a celebration and an adult beverage or two. But the notion that it's just lifting everything with it to me has just been madness. And I've said that before, so I'm not going to keep beating that drum. I hate to be the naysayer out here. I want to enjoy. I want to just put the blinders on and enjoy the rally like everybody else. It's fun. As someone who is paid to parse these things, it has become increasingly challenging as the days have progressed. Mr. Rock Lobster, save me. You're always a nice dose of cool, level-headed cynicism. What's lighting up your tape out there, sir?
The cynic speaks. It's just, I think I like a lot of what Mike said, and you said, it is a very much of this, and then the next day it's very much of that. It's there's no real trend. What I would say is but there's a couple of things. One is we have not left the danger zone yet. As try as we might, this is about the level at VIX where things just bounce. So I'd say that. Two is, for sure, all of the rates in the Southwest and just, I guess, in the South overall, like Southeast, South, like Texas, California, the rates are going up. So that means more people will die, but are they going to die as fast as they did in March or April? I think that does not look like it's the case, at least right now, but we'll know, I guess, in a couple more weeks. So every time I look at COVID, everything's 2 weeks because it's 2 weeks from the last this or 2 weeks from the last this. And, after 4 weeks, if somebody's really sick, are they super sick? All that kind of stuff. I just think doctors got better at treating it. They're starting to figure it out. They haven't cured it for sure, but I think they just got better at, treating all the bad stuff that killed people. But if you're still a really sick person or have health issues, it hasn't gone away. So the underlying thing hasn't gone away. And I think just, at least for now, not people are, they're opening up, and then at the same time, nobody's, I think, kind of practicing the sort of social distancing and washing their hands and stuff like that. So I think people are being stupid because it seems like other countries aren't having a bigger problem. So why are we having a problem when, theoretically we're not doing a whole lot different than they are, right? It's just the citizens of countries seem to be acting better. But it appears like some Europeans are already going back to school. So what's the difference? So the only difference that can be is just in this country, people just have to sort of toe the line until, the virus is gone. That's just, again, my opinion is, and I think that's part of why we're having the problem. So that is kind of where it is, although it appears not to be as bad as it was before, only because either doctors know how to treat it better, so it won't be as bad. And there's less of a surprise about what it is, at least for right now. Also, there's that factor. So things aren't as bad as they were in April, but it's still a pretty big freaking nuisance for the economy, for people's lives, for kids going to school, home life. So it's still a pretty, what I would just say, disrupting force. And it's not going away next week or a month or 2 months from now. And then the market spends a lot of time to handicap what that all means. So if people are buying stocks, right, and thinking of like TOSAW, they're, okay, if this goes away, and then a year from now, where will stocks be? Will they be higher or not? And I think that's, when you buy stocks, you're sent in the U.S., you buy America, and you buy, the globe and global growth and all that. And that's been a pretty good story for, I don't know, probably since the mid-'70s, or actually historically for a long time. If you look at the U.S. at least, because the U.S. has been here for 225 years. That helps, a country, sustain wealth and grow and all that stuff. So like the time for me to worry about the U.S. is when it's not the U.S. anymore. I think that would be a concern. And at least for right now, that's not the case. So from a vol point of view, should the VIX be at 27? Yeah, because we can move 2% in a blink. So that's not going away. Ultimately, VIX is a reflection of, VIX is a reflection of how the S&P 500 is moving, or how people think the S&P 500 is going to move. And until it stops doing that, I have a hard time seeing VIX drop into zone 4 unless there's kind of a clear acceptance of where this COVID thing is, especially after this latest outbreak, or, all these big numbers. Let's see how big it is. Like I said, if they have to start putting the tent cities back in, major metropolitan areas again to handle overflow, people will start freaking out again. Part 2 is, when do all the unemployment checks stop happening? That's another thing. So as far as like the S&P 500, if those checks are going to stop, or if Congress is really going to pass it again, I think Congress spent a lot of money, and the Fed, just bought a bunch of assets, which they'll end up giving back to people at some point. But they spent a lot of money on people kind of doing what they're supposed to do. And right now, I don't know. I think the U.S. population, I'm just saying in general, or you could say areas in general, they're not quite doing what they need to do. And you certainly don't, you shut down the economy for no reason. But I'm not even sure more shutdowns will help a lot if citizens don't do what they're supposed to do. So that's all that does is adds a lot of uncertainty. Uncertainty means vol. And since we kind of, every once in a while, we peak over the edge, kind of into the post-COVID world, we get pulled back down again. Kind of like the Godfather 3, I was out and then they pulled me back in. And that seems like what it is. And we're not getting out of it. So, but the big difference is that I thought was most interesting is, look at the Dow relative to the QQQ and look at the XLI relative to the QQQ. That's what the trade I'm interested in. The investment I'm interested in is more Main Street. I figure Main Street will come back eventually. And the Qs are just unbelievably priced. Amazon, Apple, Microsoft, crazy earnings multiples. And I know from 2000 and from seeing multiple bubbles in technology, not even bubbles, but just people just buy them up and then, they pull back. And I would say Amazon is a great company, but it's trading at a pretty hefty multiple at this point. Even Apple now, when Apple's $155, that was okay. And now it's priced at a pretty heavy growth stock when they don't sell as many phones as they used to. Google might be an outlier. They keep growing, but so even antitrust is starting to get on them and Facebook. So it's, those Q stocks are powering. Also, Tesla's worth $250 billion. So those are pretty expensive stocks. And there's a whole lot of stocks that aren't very expensive, or actually I would say fairly inexpensive if you look 2 years from now. So I think to me, that's the most interesting trade, kind of the Main Street versus the Qs. And I'm not buying any more Q stocks. I've owned a bunch for a while. I haven't bought any more, bought anything in a while, except for nibbling when we were kind of falling apart there in March and April. So, but now that we're out here, like the stuff that's most interested me is Main Street. And I know we're going to talk about commodities later, but there is some bid for commodities. Now, I don't know if that's an inflation thing or not, but that's a topic for another show. But anyway, I think a key number for VIX is like anywhere below 25. If it can drop below there and stay there, that would be a new low for the COVID cycle. So new lows are always, when it comes to vol, anytime you can set a new low during a period, it's important because that's people's expectations are changing. So we'll see what happens with all that. But anyway, that's kind of where my take on the whole thing is.
I like that. A Godfather 3 type market. Just when I think I'm out, they pull me back in. You know, it is funny how that is the most maligned of all three movies, and rightfully so. And yet that's also one of the most frequently quoted lines from any of the Godfather movies, is that. I hear that probably more than, leave the gun and take the cannolis and all the other famous lines from the original movies as well. So for some reason, that one part of Godfather 3 persists. And I think there is something to that. This is one of those weird markets where you think you're out, like Uncle Mike, and then they slowly pull you back, and then you're out again really quickly. In the case of Uncle Mike earlier this week. Let's see what our market friends have in store for us here. Let's check in on the big names out here. We'll get to the single names in a second, all the hot names you guys like to trade. First, let's go out to the index level. You guys like to trade these as well. VIX having a fairly light day, all things considered, at about $157 on the tape as of a few minutes ago. The ADV just shy of 400,000 out there. The SPY doing decent paper. It's not quite 2 million, about 1.8 million as of a few minutes ago. The ADV has ticked down, though. It's at about exactly 5 million now. It was about 5.4 not too long ago. So SPY coming in a little bit. Again, it is outside of the pandemic and everything else. It is that time of the year, folks, when people usually don't trade a lot. So we're living in oddball times just on that level alone. The notion that June would be the busiest month, not just of the year, but in history, is kind of absurd from a seasonality perspective. Yep, that's the kind of times we're living in. SPX at about, light, 456,000 contracts. That's pretty light. The ADV, 1.08 out there. So everyone's waiting for that volume to tick up in the S with the return of the pip. Not so much today. The Qs, 543,000, ADV 979, and the IWM at a little bit north of 250,000. The ADV 615 out there. So moving a lot, not a lot of paper out there in IWM today. Let's move to the little names. Let's see. Little names, not that little these days. Let's individual names and see what's going on. A little bit lighter today. Remember our last show, it cost over $200K to break into the top 10. Not today. Netflix, Widowmaker, number 10. 168,000 contracts out there. Number 9, our friends across the street, back in the top 10. Boeing, 174,000 out there. Number 8, Amazon. The Amazonians down to number 8. 190,000 contracts on the tape. Number 7, American Airlines. I believe they're doing a partnership with JetBlue, something like that, on the East Coast only there. So not quite a merger, but interesting nonetheless. Driving some paper, 219,000 contracts. Number 6, NIO. It's all freaking electric cars these days. NIO, 228,000. Number 5, good old Softy, holding down the middle there at 241,000 contracts. Number 4, Tesla. A rare day outside the top 2 for Tesla. 287,000 contracts. Number 3, Bank of America. 332,000 contracts. Numero dos here, Space, a.k.a. Virgin Galactic. They're moving 3 handles up 16.6% today. I guess they signed a new CEO. Apparently, he's the guy from Disney who was responsible for Galaxy's Edge. People like Galaxy's Edge, so I guess they think he's going to do a good job building a cool faux Millennium Falcon for Virgin Galactic as well. Either way, Space on the rampage today, 384,000 contracts. That leaves number 1. Do I really have to tell you at this point? Yup, it's Apple, 454,000 contracts on the tape. You know, it's interesting. We were just talking about it, or the Rock Lobster was talking about it. Uncle Mike was as well, about how it failed to break that 400 level. Just the value, I think it was 1.7 trillion, something ridiculous out there in terms of market cap. 1.67 right now. It doesn't seem that long ago. It wasn't that long ago where the lion's share of our audience was very nervous to sell the July 150 puts in Apple. That was not that long ago, and a lot of people thought, and Meatball, I think, even said he thought if it crossed 150 to the downside, something had fundamentally changed with Apple, and it was a different company. He was scared to sell those. So a lot of people out there in the audience, we took polls. We're terrified of selling 150 puts in Apple, and look where it is right now, threatening 400. Just insanity, however you want to parse it. But it makes for fun trading, and it makes for a fun show out here. Let's see what else is fun on the earnings front. It's been popping off all week out here. Tuesday, we had JP Morgan, Chase, we had Wells Fargo. Monday was Pepsi. Wednesday, Goldman Sachs, PNC Bank, and Alcoa, the former darling of the earnings season, now kind of relegated to afterthought status. Abbott Labs on Thursday, Bank of America, Domino's Pizza, Johnson & Johnson, Morgan Stanley, and the old Widowmaker Netflix. And then BlackRock tomorrow. Ally, our old friends over there at Ally, parent company of Ally Invest, and Citizens Bank. Let's go out to the Widowmaker, see what's up with them. As of the time of this report, they're popping off today after the bell, obviously. They were at 523 and a quarter as of the time of this report. Let's see where they are right now. They're at 531, so they haven't moved a ton, a bit, but not a ton. Not certainly not Netflix frame of reference, not a lot. They're pricing in $50, 50 and a half pretty much. And in the past, they've moved about 30 and a quarter. So yeah, that's a little juicy compared to previous cycles out there. And again, this is, I don't want to be a broken record, but this is what I expected last cycle. I expected this level of vol, given the uncertainty we had, and certainly you could argue last cycle was about as uncertain as it gets. Yet we saw people underpricing vol, and we saw that actually worked out. So I was the crazy person on that scenario. This cycle, it seems like people are pricing in more vol, and I think rightfully so again, because we clearly, as we've said most of the show already, not a lot of certainty. That's one thing everyone can agree on here. In this very fractured world, everyone can agree. There's not a heck of a lot of certainty about what's going on and what's going to happen going forward. Let's pick a few other ones that are kind of interesting. Snap coming up next week. They're on the 21st. They're at 24 and a half at the time of this report. They're pricing in 316. In the past, they've moved $4.48, so a little bit of light vol on the Snap side. Microsoft coming up a wee bit later. They're on the 22nd. They're next week as well. They were at 208.04. They were pricing in $11.70. In the past, they've moved $4.88. So tech names, at least, pricing in some juice this time. Let's go to Twitter as well. They're on the 23rd. 35.67 is where Twitter was. Time of this report, they were pricing in $3.82. They've actually moved about $4.80 in the past, so a little bit light on the Twitter vol. Let's go out to my old stomping grounds as well. Intel, they're on the 23rd. They're at $59, pretty much even. The time of this report, they were pricing in $2.94. That's pretty much in line. They've moved $3.12 in the past. So I guess on the chip side, maybe not a lot of volatility to foresee going forward. This is just a handful of dozens, if not hundreds of tickers that our friends over there at ORATS have already analyzed for you guys. We get new reports all the time. When we get them, they're posted up to the website, theoptionsinsider.com. You know where to go. So if you want to see Ally, you want to see all these other tons of names, Halliburton's on here, Zion, Bankshare, IBM, Logitech, a bunch of names out here, then you know where to go to get it. Theoptionsinsider.com is the place to go. Meanwhile, it's time for us to go right on into our next segment. It is time to get weird. It is time to get wild. It is time for the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, it's time to get weird. Time to get wild. I haven't looked at these ahead of time, listeners, so I'm kind of learning about them and analyzing them on the fly, just like you. It makes it fun. A live read here as we unleash the Eye of Sauron, see what it brought back. And this first one certainly looks like a weird one. This is a newcomer. This is CLNY Capital Inc., ticker symbol CLNY. This is an American international investment firm out of L.A. with over 500 employees. So there you go. And looks like class actions here. Either way, there's some funkiness afoot because this name is trading $1.92. So all the names we talk about, $8, $10, $20, $50, $100, $300 out there. This one, if you want cheapy action, we got you covered. Cover your ears, Viceroy, if you're out there listening, because I know this offends you to talk about options trading on a name sub $2, but we're going to do it. CLNY trading $1.92 today, off 44 cents or nearly 19%. Rough day for CLNY. Let's see, a year ago, they were looking a lot better. They were trading $5.10. So quite a premium. They got up to as high as $6.14. That looks like that was in September of last year. And then they kind of just slowly drifted down to about $4.94 in mid to late February. Then we all know what happened. Wha-bam, the hammer fell. They got down to $1.33 in the Great Nadir in mid-March. Then they kind of rebounded a bit. Then they gave it up and rebounded a bit and gave it up. They got up to about 2.5 on April 29th again, then sold off again down to about $1.50 again. So they had a hard time kind of getting their second wind. It's like they finally got it here in June. On June 8th, they were up to $3.10. So not quite back to where they were around $5, but a better, far sight better than $1.50 or $1.30. And then they have slowly, ever since then, never really looked back, kind of slowly drifted back down to where they are right now. And then, of course, not that slow today, falling another almost 20% today. It seems like there's some class action news on them or some other stuff afoot here. It's a bunch of different stories floating around about this name, but interesting stuff. Some hedge funds playing around in this one as well. But a lot of interesting stuff. Let's see what our Eye of Sauron found out here amidst all this madness. It's like about 10,000. It's one of the larger individual name prints out here today as well on the options front. About 10,000 of the Jan 2022. So these are going out a bit of a ways. 2.5 calls, listeners, going up for 52 cents. These seem like they were, the stock was 50, or the options, I should say, were 50 cents at 65. You can get a 5 lot, they were 5 by 50. Obviously, that's not true, because this guy got about 10,000 off at 52 cents. So clearly that 50-cent bid was good for more than 5. But c'est la vie, that's what they're showing you. That's the hand they're showing you to start off. This guy got 10,000 off at 52 cents. So it looks like it's probably a little bit of the old premium harvesting out there. There are earnings, but there's going to be many earning cycles between now and August 7th is the next cycle, but between now and January of 2022. Mr. Rock Lobster, riddle me this. I know you like yourself a set it and forget it type trade sometimes, and you like to get a little bit of yield. How does this float your boat, though? 52 cents to cap yourself off. So obviously you're capping yourself out at the upside around $3, which is a decent rally for this name. Does this excite you to put on this stock? And obviously, if it's at $1.92, the pathway down to zero is not difficult at this point. So you're threatening your capital going the way of the dodo, but you're getting 50 cents for these. What are your thoughts on locking up this name all the way out to January of 2022 for 52 cents, sir?
Well, you can think about it as you're getting massive yield for a year. You're getting 20%. However, the stock was $6, and now it's the
stock just lost almost all the premium you got in a day.
Yeah.
Just keep that in mind, whoever's locking this in for a year and a half.
I know. So, it was just over $3, and it was $6 before all the whatever, the COVID happened. So my least favorite trade is locking in $1 like way out in time. Like I could see, like this is I guess it's a synthetic is similar. So let's say if you just sold a put, right? Just if you go through the arithmetic of this. So when you buy a call, when you buy stock and sell a call, you're selling a put, right? So they're essentially selling the $2.50 put for $1, right? That's kind of, let's say 2.5. I want to make sure I get the yield right. Yeah, they're selling a 2.5 call for a half. The stock's trading 2, so that would be selling the 2.5. The 2.5. For $0.50. No, because the calls have premium. Sorry, it is $1. I see, when I think about it, I can't do it. But if I just look at it, I know just from practice from 10 years ago. So anyway, so you're selling the 2.5 put for $1, right? So you could just sell that put for $1. And then if the stock starts to rally, let's say you close it just for $0.50. But if you have the buy right on, you have no way to really, so if the stock rips, it's hard to close the position. You're going to be taken out and you're going to make money. But having a short put in this case, you just get to close the short put. And if you feel like it, you can flip to a call or whatever. So I think when vol's this high, I find it better just to sell the puts, which we talked about. I don't know how many times. We got hate mail on that. When I said pick a ridiculously low price for the stock and sell the puts.
Yeah, you made some friends with that one, sir.
Which ended up being not a bad strategy, by the way.
I believe our buddy Scott Nations was not a fan of yours after that.
He was not a fan, although it worked out pretty well, at least for me. But I don't know what anybody else did. But when you look at this trade, so if you do a long-term buy right, you're really tied in. And this is even though synthetically they're the same position, right? Now you could also just close your stock and your call, and you could get out of it the same way. But if you, for whatever reason, you don't want to close the stock or you can't close the stock, so you can always close both sides. But I think in this case, the long story short, I don't see what the use of selling a call out there against your stock is, because you're going to have to just unwind it anyway. Might as well just keep the stock and let the upside go, as far as I'm concerned. But that's how I would do this. But if you had a choice, I think it'd just be easier to sell that, sell the 2.5 put, and you might be able to close it in, a month if the stock starts to rally or the vol comes in, and decide whether you want to get more aggressively long on the upside. So, why sell the call that far out? Position management wise, it's not my favorite thing to do.
I knew you would love that one. I knew that would be high on your savvy scale. Yeah, I'm not a fan of that approach at all either. The whole reason to be in a highly volatile name to begin with like that, and especially after it's been beaten up that much, and you're taking all that downside risk, which is still substantial, it can go to zero, even though it's only about $2, is to have that upside and just cap it away for that long of a time. It's a hefty premium, but it just gave up most of that premium already just today, just in the stock. So 50 cents is not going to get you that far on a name like that. Give yourself some room to run if you're going to be in a name like that. So yeah, we're not going to watch this one. Listeners, not going to hold on to it until 2022. We have other trades to parse, but not our favorite out here. Let's see what else we got. Flipping the script here. Let's go out to Bloom Energy Corp, ticker symbol BE. This one's trading 1776 right now, up about 0.5% or so kind of in line with the market out there. This is a maker of solid oxide fuel cells. And let's see, a year ago they were trading $12, so it's been an interesting run for them. They sold off before all the madness. Oh my God, they sold off down to $2.96, actually lower than that, $2.70 or so, down in October of last year. So they went from $12 to $2.70 in the span of, looks like a few months there of last year. So they were already having a rough year. And then they rallied back. They came all the way back to $14.09 on February 9th. They rallied just in time for the world to fall apart. This chart is almost emblematic. It's a microcosm of the fuel cell industry as a whole. Just pits and starts, valleys and some optimism, peaks of optimism, and then extended, protracted valleys again. People have been talking fuel cells for as long as I can remember, and we still have yet to see them really materially make an impact on the space. But I digress. 1409 was the high right before the madness, and then it got clipped yet again back down to $3.07 on March 18th. Then it slowly started rallying again. By May, it was trading $7.85, looking pretty good, and now it's back to where it is right now, $17.81. So it's north of where it was a year ago, and another $5 or so. So crazy year here for a fuel cell named Bloom Energy. Let's see what our Eye of Sauron found. Mr. Meatball, seems like someone's feeling the gusto, feeling the furor, feeling the love out here, because someone looks like they're taking all they can get of the AUG 20 calls for a whopping $2.80. These are meaty. These are calls that are going out in about a month. This guy's paying nearly $3 on a $17 stock to get these calls over there on the Philly. There are earnings. They are on the 28th, so there's some earnings juice built into this as well. It makes it make a little bit more sense. Mr. Meatball, Mr. Rock Lobster, we just talked about selling crazy long-term calls for not much money. Now, what do you think about buying very near-term calls for a whole bunch of money, sir? What do you think of this one?
At least you can make a case that the stock is volatile. I think this thing is having the Tesla effect. I mean, what was it? It was in the, I guess, mid-June, it was $8.70, and now it's $17.87. So it's fuel cell. I think everybody's riding the Tesla halo. Anything that's even remotely green energy, riding the Tesla halo like crazy. So I don't see how this is any different. It's like all these companies, I want them to work, and I want the technology to work and everything to be hunky-dory. But as companies, they still have yet to have that, that wide, the wide acceptance. So, the technology or people using it or whatever. So, the 20 calls for 280, and this is, who knows where their stock is going to be. But I just, why they're buying these calls and try to just, and they're just trying to whistle past the earnings. I guess everybody's looking for a Tesla, another one. And that's what this looks like to me, though. But no, they're not calls that I would want to purchase, especially with a stock that's up like $7 or $8 in the last 3 days. So it's just, unless they've invented a cure for energy, it looks crazy spec to me.
Yes, this definitely gets the crazy spec tag. We're going to come back to these. Go figure, listeners. This guy's paying some juice, and this thing's already moved, so you could argue that some of that vol, that's at 152 IV, if you're curious out there, listeners. We're curious what you guys have to say as well, so without further ado, we're coming up against it. I want to get some of you guys on the show. Let's get on into the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, you guys know the drill. You take over the show on Thursdays during the Mail Block. Sometimes we ask you guys questions as well. Mr. Rock Lobster, you may or not have heard of this, but last show on Monday, your compatriot there, the Greasy Meatball, and I got into a heated discussion about whether or not that iconic Burt Reynolds film from the 70s, Smokey and the Bandit, he referred to it as that Burt Reynolds Western. I was like, what the hell are you talking about? So that led to a protracted conversation about whether Smokey and the Bandit is actually a modern interpretation of a Western. He doesn't wear a cowboy hat after all. So at the end of the day, we put it out to our audience. And before I reveal their thoughts, you didn't get a chance to weigh in. Mr. Rock Lobster, what are your thoughts? Smokey and the Bandit, a Western, yay or nay?
I can't say that as a Western. I mean, I could see from some strange, I could see if you follow the dots somehow, you got Sally Field, okay, there's always like the hot chick in a Western, you got the bandit, you got the sheriff, you got the chase. I mean, you would have to make a stretch. I don't know if John Ford or anything like that would appreciate you calling Smokey and the Bandit a Western, but any of the great Western directors. I think it probably made a great show.
It was pretty fun. And it did make me want to watch Smokey and the Bandit again. I haven't seen that movie in forever. So I think the presence alone of Dom DeLuise kind of mitigates the fact that it could possibly be a Western out there. But our audience agreed. We gave them a quick flash poll during the show. Do you agree that it's a Western, yes or no? 77.8% agreeing with me, saying no. Only 22.2% agreeing with the meatball, saying, I think that was mostly him. He did admit that he voted in the poll, so he skewed the numbers out there. Neil Wales, our old buddy, he of the unerringly precise end-of-year VIX predictions. I think he's won it like 2 years in a row. He chimed in and said he missed the poll, but he knew he would rather watch that movie than a Western. Well, maybe. I can say there's some good Westerns out there. Unforgiven's a good one. I'm kind of getting out. I want to go back and watch all the spaghetti Western oeuvre. I think Ennio Morricone just died recently. Or was it Sergio Leone? One of the two. The director or the composer out there. Either way, made me want to think about watching those again. But there are some good Westerns out there. Of course, the old John Ford ones that the old-timer Mr. Rock Lobster mentioned. Whatever you like, to each your own. Oh, this is more. You get more comments on your comments here, Mr. Rock Lobster. Last episode, or maybe a few episodes ago now, you suggested Berkshire Hathaway was a good, cheap way to buy Apple. And a lot of people had interest in that, including CRESQ. Maybe he's CR Esquire. Either way, he says, you'd make more just buying Apple outright. I bought 2 shares of Berkshire A. That's pricey. That's a house. Thinking it was a brilliant long-term play. Meanwhile, it's my only stock that is red while others are flying, being Facebook, Apple, and Baba and a bunch of others. So there you go, Mr. Rock Lobster. CRESQ here. He tried your idea and it didn't work out for him. Well,
you know what? Apparently, is 1 week a long-term play? I think that is really the question that we want to ask ourselves. Is 1 week a long-term play? I don't know if 1 week's a long-term play. What was that, last Monday?
This was on the 9th. So this was exactly a week ago, yeah.
All right, so I'm just going to say, so you're buying Berkshire at 181. Today it's 190, okay? That's Berkshire B. Berkshire A is the same thing, okay? That was Tuesday, so it's up about $10, right? Apple, over the same period of time, let's just see. All right. On Tuesday, Apple's trading, let's see here. What do we got? So Apple was trading let's call it 377, and it's trading like 385 right now. So they're up about an equivalent amount, just Apple versus Berkshire. So I don't, clearly they're being a little bit grumpy, but I don't think it's as bad as he.
Well, there you go. Berkshire Hathaway, by the way, are now at a Class A $285,000 even, listeners. So 2 shares of that. CRESQ is slinging some size out there. I like it. All right, we got time for, let's go one more here. This is the handle. Crosshane de Gorilla Trader with an A. Who's a good broker that allows shorting? Well, I think most good brokers will, I'm not sure, I'm assuming you mean shorting options premium. Shorting the stock, most brokers, if you have the account size, will allow you to do it. Shorting options premium, most good brokers will as well, depending on if you have the level 3 clearance out there to do it. I don't know, Mr. Uncle Mike, what recommendations do you have for Crosshane de Gorilla Trader? He wants to know a good broker that allows shorting, sir.
We primarily have a lot of our money at TD Ameritrade. Through our RCM umbrella at TD Ameritrade. And so what I like about them is that when something bad happens, they'll help you. Bad things are going to happen at every broker you go to, whether there's a glitch in the computers or the system's down or something like that. It doesn't really happen often, quite honestly, at TD Ameritrade. Maybe once a year I have an issue, and even then it's very minimal, but they'll help you with it no matter what. In terms of shorting, if you're looking to short specific stocks that are on hard to borrow lists or something like that, you're probably going to run into similar problems at whatever broker you go to. And I think that most brokers do allow shorting stock and shorting option premium if you have the capability of doing that within your financial resources and your knowledge of option trading. If you can't pass whatever tests or whatever criteria that brokers have for you to do those things, I've seen pretty much all brokers' criteria for doing those things. And if you can't get by it, you really don't need to be shorting options. So that's my take on it.
Yeah, I was kind of surprised. I was setting up, obviously tax day was recently this week, and I was helping people set up some final IRA contributions, setting up IRAs if they didn't have to, and just going through the approval levels for 1, 2, and 3 for new accounts out there. I was stunned at how easy and how simple it is. You just click a button effectively if you want level 3, which maybe leads to what we were talking about earlier on shows like Options Bootcamp and things, some of these tragic outcomes where people are getting into positions that they clearly don't understand. Who's not going to click the maximum amount of opportunity in their account? Of course they're going to try to get that. So there's a lot of people out there floating around in level 3 accounts, it sounds like, that probably shouldn't, just given my recent experience setting up some accounts for people out here. It's interesting stuff out here. So there you go, Gorilla Trader. I like that handle. Any savvy broker will allow you to do this, depending if you make the criteria and if you know what the heck you're doing, which gets into a whole bunch of other stuff we talked about on this show many times on this, of course, OPR, Options Bootcamp. A lot of shows for you guys to sink your teeth into on that front, on the educational front. Now it's time for us to keep on rolling. It is time to go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, welcome to Around the Block, the portion of the show we tell you what we're watching for the rest of this week. Quick check-in on what's going on. Since we started the show, most of the major indices are still pretty much off. NASDAQ has retreated a little bit from its off 1%. It's off about 0.85%. S&P off about 0.5% still. The Dow actually expanding its downside a little bit, down off 0.65, and the VIX down about 27.25 or so, which puts it off. Looks like about a point, I think, from where it was. Yeah, about a point from where it was this time last show. Let's go around the horn. Let's start with Uncle Mike again, sir. What are you watching for the rest of this week into the weekend?
Well, I'm just watching the 322 level with SPY. It seems like we're flirting with it, so I'm very focused on that. Also watching any COVID news that comes out. For the most part, though, I'm just kind of being cautious at this point in time, and that even if we have good news, for it to be real good news, it's going to take time for real good news to come into play. So just be careful out there and don't necessarily buy the immediate good neuse.
That's been good advice for a while out here. Mr. Rock Lobster, same question for you. What are you keeping an eye on for the rest of the week into the weekend, sir?
I get those in levels in VIX, and if we can get over 3,200, I'm still looking at Main Street stuff. I'm not that much interested in the big Q stuff anymore. I'm just looking at just like kind of old industry, oil, airlines. I'm kind of iffy on, just mostly oil and banks. There is like the potential for like sort of after the federal government has been paying people, mortgages and all that. I still think there could be, let's just say there's plenty of uncertainty out there. So, but I like to see if that vol could actually come in. So anyway, I'm just going to keep it the same strategy of looking for ridiculous put prices, selling those and seeing what happens. And so far it's been working out. Again, I didn't think we could ever get back to unchanged for the year so fast. But anyway, that's where it is. So as long as we keep having this at the high vol, I'm just going to take advantage of the high vol as best I can.
There you go, listeners. That music means we've come to the end of this journey. But if you're saying to yourself, I need some more, maybe, preferably even with the Rock Lobster and Uncle Mike in my ear holes, we won't have to wait too long. They're going to be joining me, a rare double duty appearance of them both joining me on TWIFO in a little bit. But before we go, if you're just listening to this show after the fact and you're saying to yourself, where should I go for, let's say, someone who wants to hold my hand during these crazy pandemics and walk me off the ledge? Uncle Mike, where should I go, sir?
stcharleswealth.com. If you'd like to work with an advisor who is actually concerned about this and doesn't want to just pass things down the road and say, it'll come back, reach out to me, stcharleswealth.com. Would love to have a conversation.
There you go, stcharleswealth.com. Mr. Rock Lobster, if I can't wait until your next appearance on TWIFO in about half an hour, I want to reach out to you now. What's cooking in the land of the pits?
Come on over to Option, go to memberships and check out all the stuff we have. Sharp Edge, Vol Edge, the Trading Legion. We're going to have snappy hats pretty soon. All that kind of stuff. So if you want to learn how to add trading vol to your investing, come on over to Option Pit and we'll certainly help you.
There you go. OptionPit.com is the place to go. And on behalf of the rockingest of lobsters, the uncleest of Mikes, and indeed myself, I thank all of you out there for downloading, streaming, subscribing, for sending in such great questions, for voting in our silly polls, all the fun stuff that we do. Keep it coming. Like I mentioned, if you're listening live, stay tuned. We'll give you some fun stuff to listen to. We'll be back in exactly half an hour with the Rock Lobster, with Uncle Mike and our buddy Mr. Sean Smith over there at Footsie Land to break down all the hot stuff happening in the futures options side of the space. If you're listening after the fact, just hit next. And we'll see you back here tomorrow, 1 p.m. Central for volatility views. Then it kicks off again on Monday for more of the Option Block.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.